And within 6 months to a year and 18 months of these things, there are these crazy price appreciation cycles. 18 months after the first halving, the Bitcoin price returned 45x. Young people do not show up to vote because there isn't an issue that they care about.
Correct.
But there's 50 million Americans that own crypto. 50. So why is this interesting? So here's a little Bitcoin price analysis for you guys. So there's been a couple of halving cycles that have happened. And I asked him to go back and look at the price performance 1 month after a halving, 3 months, 6 months, 9 months, 12 months, and 18 months after a halving.
Chamath Palihapitiya embodies the modern archetype of the tech disruptor turned visionary investor. Rising from humble beginnings in Sri Lanka, he ascended the ranks at Facebook, where his brilliance in product management helped shape the platform's early success. As a venture capitalist, he's a force to be reckoned with, leveraging his insights to champion investments that prioritize social impact alongside profitability. Palihapitiya is not one to shy away from controversy. His outspoken views on tech ethics, wealth redistribution, and the role of government often spark debate. Yet, his track record speaks volumes, with successful investments in companies like SPAC, Social Capital, Yammer, and Slack. Chamath recently appeared on the All In podcast, where he made an astounding prediction about Bitcoin's future trajectory. He discussed Bitcoin's evolution over the past 3 halving events and anticipates a significant price surge within the next 18 months. As we bring you clips from the podcast, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you and enjoy the video.
And what you notice is that there are these moments initially where essentially when you go through a Bitcoin halving, people are sort of reassessing what's happening. And they're trying to figure it out. That's sort of what I would say happens in the first month and roughly what also happens in the first 3 months. But then within 6 months to a year and 18 months of these things, there are these crazy price appreciation cycles that happen. So that's what this page shows, which is, 18 months after the first halving, the Bitcoin price returned 45x. After the second halving, it returned almost 28x. And after this third halving, it returned almost an 8x, which is really incredible returns in such a short period of time. If you graph that, this is what it starts to show, which is what is this price performance after each of these halving cycles. Now, why is that interesting? Well, it's interesting because on top of this halving, which theoretically, if history is a guide, we should see some price appreciation. Obviously, the other thing that's happened is we've commercialized Bitcoin. And we talked about this sort of as my big prediction for 2024, which is these ETFs are really going to allow Bitcoin to cross the chasm and have its sort of central key moment, right? We took these and we applied it to the price of Bitcoin. And if you go to the next page, you start to see what could happen if you just take the average of the last few cycles. So because the first cycle was so extreme, and you start to
so you're just doing cycle 2 and 3 here, to be clear.
Just the averages of cycle 2 and 3. And what you start to see is some really meaningful appreciation. And when I talked to Wences about this, how he explained it, which makes a lot of sense to me, is there are a lot of countries that will never look at Bitcoin credibly, even if they support it. The US may be one of those. But there's an increasing body of countries that will become dual currency. And they will look at their local currency, and then they will look at Bitcoin. And they will say both of these two things are needed. One, when you're transacting on a daily basis for random goods and services. And two, when you need to buy a permanent asset that needs to have residual value, you'll use something like BTC. And I think that's a very powerful concept. And if you look at what this price chart could indicate, is that if this thing starts to get to these levels of appreciation, it is going to completely replace gold and start to become something that has transactional utility for hard assets. And I think if you marry that with this worry that some folks have about dollar debasement, you start to see some really interesting opportunity.
In recent times, accomplished investors and hedge fund managers have cast doubt on Bitcoin's potential and its capacity to serve as a reliable form of currency amidst growing disillusionment with government policies. Figures like Warren Buffett, Charlie Munger, and Bill Gates expressed skepticism or outright dismissed Bitcoin as a scam, favoring its demise. However, in a CNBC interview in 2018, Chamath shed light on Bitcoin's true nature and refuted the assertions made by Buffett, Munger, and Gates. His analysis convincingly contradicted their perspectives, asserting that they were mistaken in their assessments of Bitcoin's viability and potential.
Not everybody is right all the time, and I think we have to acknowledge that we all have biases. And look, I'm a disciple of Buffett and Munger, and one of the things that they have said for years, which I believe, is you define a circle of competence and you stay within it. And I think it's been clear in his entire investing career that technology is not in his circle of competence. And so the only technology name that he's owned is Apple.
But Chamath, just going back to this, I don't think he looks at it as a technology. I think he looks at it as an asset class that he would put in a similar class with gold. Just it's a non-productive asset. It's an asset that is only worth more if other people agree to pay more for it. That's the type of issue that he's talking about.
Which I also agree with. I think it is exactly that. I think it is a replacement to gold. But again...
But you like gold. You're saying you like non-productive assets.
I like in a portfolio. Again, my portfolio is 99% risk on, 1% risk off. And in that 1% risk off bucket, I think that something like Bitcoin is really important. Why? Because it is not correlated to the rest of the market. I've been in the Bitcoin market since 2012. And I feel like I'm in two different universes. I need a passport to go between the Bitcoin world and my regular world. These are not the same people. And what I would tell you is the people that owned Bitcoin in 2012 all the way up to now, the majority of those people view it as a hedge to the traditional financial infrastructure. Whether that's true or not is unclear, but that's how we've all viewed it. Separately, what Joe says is absolutely right. There's a big difference between correlation and liquidity. And the reality is all of these financial assets in the traditional markets are fundamentally correlated. We saw that in 2007.
In 2008, the world witnessed one of the most devastating financial crises in modern history. It was triggered by the collapse of the housing market bubble in the United States, leading to a domino effect that reverberated across global financial markets. Banks faced insolvency, stock markets plummeted, and millions of people lost their homes and jobs. The crisis exposed deep-seated flaws in the traditional financial system, characterized by centralized control, opacity, and susceptibility to manipulation. Amidst this chaos, a mysterious figure known as Satoshi Nakamoto emerged with a groundbreaking solution: Bitcoin. Released in 2009, Bitcoin represented a radical departure from traditional currencies. It was decentralized, operating on a peer-to-peer network without the need for intermediaries like banks. Transactions were transparent and immutable, recorded on a public ledger known as the blockchain. Satoshi Nakamoto's creation offered a glimpse of a new financial paradigm, one built on principles of trustlessness, transparency, and censorship resistance. In the wake of the financial crisis, Bitcoin gained traction as a hedge against economic instability and government overreach. Its decentralized nature appealed to those disillusioned with traditional financial institutions and their role in the crisis. Thus, the emergence of Bitcoin amidst the 2008 financial crisis symbolizes not only a technological innovation, but also a response to the failures of the existing financial system. Satoshi Nakamoto's vision continues to inspire a growing movement towards decentralized finance, challenging the status quo and offering a glimpse of a more equitable and transparent financial future. Chamath's perspective on Bitcoin was shaped in direct response to Warren, Charlie, and Bill's skepticism. He sees Bitcoin not just as a cryptocurrency, but as a store of value, a crucial distinction. Many young people in particular resonate with this aspect, seeking to shield themselves from the fallout of the 2008 financial crisis, where investments were wiped out. Let's get back to the video.
Everything broke down. Things that we thought were hedges went away. And so I think it's really important to not forget what happened there. So in 2018 or 19, heaven forbid we go through another cataclysmic financial event, we are going to see the same fundamental correlation. And so again, I ask, why would it not make sense to have a non-correlated hedge? For a small amount of this is about buying insurance. It was the same reason why in 2007 and 8, the folks that bought simple insurance bought some CDS,
you might
looked like
as well
heroes.
buy gold. I mean, at least gold's got a 3,000 year, or 10,000 year record of being a store of value. I mean, I think that's the other thing Buffett's saying. There's no reason to think this is a store of value.
I think that's a fair point, but I think these are not exclusive decisions. And you know, for this younger class of entrant into the market, they probably don't want to buy gold. In fact, they don't want to buy gold, and they want to buy something that's much more digital and reflective of their values. Look, I think it's really unfair to not understand something and then to disparage it. Again, I think he's exceptional. I think Warren Buffett is exceptional. I think Bill Gates is exceptional at what they do. And I think it's fair to say that in 30 or 40 years, if I'm, you know, a vibrant, successful investor, and if I'm back on this show, the idea that I know what's happening 30 or 40 years from now, as well as some other new 40-year-old or 30-year-old entrant into the market, is just not true. The reality is things change.
Chamath firmly believes that this trend will impact the 2024 U.S. election significantly. Trump's pro-Bitcoin and crypto stance resonates with many young people who have chosen to store their wealth in Bitcoin. In contrast, Biden's administration, represented by figures like Gary Gensler and Elizabeth Warren, has expressed intentions to curtail Bitcoin's progress.
You know, back to the young people we talked about in the previous story, I think the reason they're attracted to crypto is because it doesn't have government control. And since if you don't trust the government and you see the government over and over and over again cover things up or the grift or make decisions that are not in your generation's best interest, why wouldn't you opt out of their financial system? And you know what? There's a lot of them, and they're getting organized. To your point, Sachs, I think we're going to have a crypto framework, and it's worth probably 5 points in this election. What do you think, Sachs? How many points is being the pro-crypto candidate worth in this election? 1, 2, 3 points of votes? 4 points? It's got to be some significant.
It's hard to
if young
quantify,
people show up, it could be 500 basis points. I mean, young people do not show up to vote because there isn't an issue that they care about.
Correct.
But there's 50 million Americans that own crypto. 50.
Okay, so if 10% of them are, like, let's say that's their single issue, that's 5 million votes.
No. There's a plausible case where 40 million of those folks show up because you're talking about a structural part of their wealth creation, right? So, for example, like, you know, President Biden talked about giving people a head start by eliminating their debt. That's a narrow issue. And the reason it's a narrow issue, there's just as many people that don't have debt and just as many people that paid off their debt. And it creates a lot of haves and have-nots, right? And there's all these rules around who will get the debt relief, et cetera. You end up touching 4 or 5 million people maximum. But if there are 50 million people who have now decided to have at least a hedge against the establishment and the traditional financial system, and you are threatening to take that wealth away, I could see how 80% of those folks show up to the ballot box and say, all right, which one of you will just leave me alone? And if the answer is President Trump, then they're all going to vote for President Trump.
There you have it. Chamath's insights into Bitcoin predictions and the impact of halving cycles on Bitcoin price and Bitcoin holders on the U.S. election. Reviewing 3 halving events, it's clear that Bitcoin could experience exponential price growth, potentially reaching impressive all-time highs. What do you think about Chamath's analysis? And hope you got some value from this video. Please drop your comments and observations in the comment section, subscribe to the channel, and give this video a thumbs up. Thanks for watching.